Let's stay on this volatility theme for a minute. We were just talking about the Truth Social parent company, a pretty volatile stock so far this year. Ben, you're looking at the markets pricing in a red sweep of Congress. Henrietta, you're looking at Polymarket giving Trump some very favorable odds for Election Day. Every note I'm reading, that's the scenario. Red sweep, Trump winning is that creates the most volatility, whether it be bond yields, inflation, the deficit. Are we seeing that in the markets right now? Henrietta, I'm going to start with you.
Well, I think the bond markets are actually showing the widest amount of risk that we've seen in decades. There is a tremendous amount of uncertainty. I think the Citi comments that you had up just earlier were exactly spot on. The Polymarket odds are not polls, and they're not representative samples of the United States, but they are going strongly for Donald Trump. And I would say, in my experience, they're at 66%, but the street's at like 75% that Trump is going to win. But that's largely driven by internal vibes, and we're not seeing it in the data. There is positive information coming out in the early voting data from Nevada, for example, but there's a long way to go before this gets sorted. And the market is, I think, too optimistic for Trump right now.
All right, you think it's too optimistic, but I'm going to come over to you. We have seen bond yields rise. A lot of people think that's due to the perception that former President Trump has an advantage on Election Day. Also seeing the dollar rise. A lot of people think that's also a quote-unquote Trump trade. Are you seeing some of this in the markets? If so, where? And does that create opportunity?
Yeah, I think, Frank, to Henrietta's point, that there's a betting here on Trump in terms of, and not forget, by the way, that a lot of that is overseas. Right? There's overseas investors are doing these bets. So I guess there's a view globally that that's the election. But what we're really looking at here, if you think of the August lows, particularly when we had that carry trade unwind, what are the sectors really outperforming? It's casinos, it's restaurants, it's hotels, it's airlines, it's financials, it's consumer discretionary. So I think it's also, Frank, about the economy that's going through a re-acceleration into this election, while people anticipate that there will be a red sweep of Congress, and that potentially could lead to a quicker path to corporate tax cuts and income tax cuts, which then fuel the economy even further. So I think it's a combination of the fundamentals driving yields higher and stocks higher against the backdrop that people feel very certain that there will be this red sweep outcome.
Henrietta, I want to come back over to you. If we do see this red sweep outcome, that obviously increases the likelihood that we're going to see an increase in tariffs. Where are we seeing that in the markets right now? And if the market has so much increased confidence that former President Trump's going to win, shouldn't we see big gains in industrials, manufacturing, things like that, with the idea that more things will be made here?
That's a great question. I think it's twofold. First, the tax bill is going to be extended. My odds for the Senate are 90% that it's going to be controlled by Republicans. So even in the event that Kamala Harris wins, all of the existing tax rates are going to be extended at their current levels for at least 2 years. Under Trump, they would not be cut further. They would be also extended for maybe 4 to 6 years. So that's the biggest variable on the tax front. And as such, I think you're exactly right to point out tariffs. Those are the #1 differentials between a Trump and Harris election. I think the irony on the tariff side is not only is it, trying to raise prices for importers, but a big part of his tax bill is unwinding the domestic incentives on manufacturing in the Inflation Reduction Act in particular, and those clean energy tax credits. So his main pay for in the tax bill is to repeal the IRA. So I think it's a 1-2 hit, and I think investors should be, rightly digesting the puts and takes on manufacturing.
Really interesting. Your point about taxes is actually really interesting. The idea of especially corporate taxes. Ben, I want to come back over to you. Just this idea that we're going to see an extension of those tax cuts. Do you think that's part of what's really supporting the market right now?
It is, because if that weren't to happen, then you do get an adjustment of corporate tax. Let's say the average corporate tax rate again higher, and that would, I think, affect a lot of companies. In fact, I think the market rates trading is that it does anticipate that as these corporate tax rates are rolled over next year, as Henrietta says, it's quite likely that is the case. There's still companies that are paying above that average rate. I think in addition, it's just more the overall support that has for the economy. You're getting a favorable corporate tax climate here in the US. That's I think the hallmark, I think, for either administration. If you want to bring back all this onshore, all these American investments onshore, you got to create a favorable investment climate. I think that's what the market is trading. It's anticipating that we're going to see more investment alongside of what's already happening in the semiconductor and AI data centers.
But I'm going to stick with you for a minute. I know you're looking at defense stocks, specifically the XAR ETF, and also gold right now. Again, with so much sentiment on Wall Street, especially that former President Trump's going to win and growing sentiment that we're going to see a red sweep, how does it make you view those two groups of investments, both gold, precious metal commodities, and also defense stocks?
So what's amazing with gold is like normally this is an asset of uncertainty and this is an asset of some sort of a range of outcomes. Now that is probably the case. We going into an election, whomever will win, there will still be a range of outcomes. That's probably fueling gold. But then when you get this defense stocks being in demand, there's anticipation that geopolitical tension may actually start to rise after the election. That's maybe what's driving that. But it's also, again, back to investment. Like we want to have a strong defense here. I think that's just a big focus in either administration. So, it's essentially driving up, again, the economy through defense sector. So I think this is why it's in a lockstep and why it stays probably that way, because I think this is the trajectory. And post-election, more geopolitical tension potentially drives up defense stocks.
All right, Henry, I'm going to come back to you and give you the last word here. Again, the market sees things one way. Most of the polls we're seeing, they say it's pretty much a dead heat. Either way, either candidate that wins, I think the consensus is just based on their policies, we're going to see an increase to the deficit in different magnitudes, but an increase to the deficit. As we look at that, Henrietta, if you're an investor, what parts of the market should you possibly lean into? Which parts of the market should you just stay away from?
No, that's exactly right. And Ben nails it. There's no chance that defense spending comes down. I think a little known sort of reality and well known in appropriations and budget circles, which are admittedly very wonky, is that you're going to need 60 votes for any funding bills next year, whether that's cutting or raising or continuing spend. And the path to 60 under Harris or Trump in the United States Senate is going to be with more spend. So there's no scenario where there's reduced defense spending. There's no scenario where there's reduced domestic spending. I think there will be another basket even of aid to Ukraine and Israel if we get to that, either under Harris or Trump, but more likely under Trump. In general, spending is going to continue to go up, and deficits are going to be at a minimum $1.5 trillion, and at the high end, I think $3 trillion in the next bill that we write in 2025.